This video is brought to you by Knowledge at the Australian School of Business. For more information, please visit knowledge.asb.unsw.edu.au.
Sustained growth is often seen as a doorway into rising prosperity, but the question is, how do we actually achieve this? Well, one suggestion is by new innovation. Innovation in terms of new products, processes, really is a lever to generate new wealth. This is a subject close to the heart of Professor Fred Hilmer, vice-chancellor of the University of New South Wales. He also holds an MBA from the Wharton School in the United States. So Fred, what really is the connection between innovation and increased productivity?
I think, as is widely recognised, innovation is important, but it's also a very loosely used term. And innovation in and of itself doesn't improve productivity, but effective innovation does improve productivity. I mean, what we know about innovation is that most innovations are commercial failures. And so a desire for innovation, which is laudable, does take you into a very risky landscape. If you look at new product introductions, for example, I know studies I'd seen years ago in the grocery industry, 1 in 6, 1 in 10. So, you know, you're innovating a lot in order to get relatively few commercial successes. But what you need in an economy, therefore, is lots of innovation, but done hopefully in a way that allows people to cut the losses on the ones that aren't working quickly and to build on the ones that have potential and commercialise them well. And the issue for Australia is not so much an issue of innovation, but it's an issue of commercialising innovation.
So is there insufficient focus then on innovation? Certainly entrepreneurship, which is very different, seems to get much more of the limelight compared to innovation.
Yes, and again, without becoming a semanticist here, I think that we focus a lot on innovation, but we probably ought to focus on the drivers of innovation, not on innovation itself. We should also focus on the commercialisation of innovation. What drives productivity is the incentive structure in the economy for people to improve, to take risk, to innovate. We had a very vibrant incentive structure in Australia through the 90s and the early parts of the 2000s, and that incentive structure is being blunted, I think, at this point in time, partly as a result of the global financial crisis, partly as a result of what is, I think, an implicit change in policy and emphasis by the government in terms of microeconomic reform and the stimulus that would drive successful or wealth-creating innovation.
So are we talking in terms of incentives for innovation about tax, about regulation, about tariffs? What particular areas?
All of those.
All of the above, yeah.
I think the most important incentive is competition. If you and I are competing in a market, the best way that one of us is going to win is finding something that I can do and you can't, or that I can do first and you follow. Whether it's a new product or whether it's a better way to make something or whether it's a new technology or web-based application, there's an enormous gain to the first innovator. And the spur for that to occur is typically a competitive situation. I'm looking over my shoulder at you, Apple's looking at Microsoft the whole time, and we're getting a wonderful range of innovations coming out of that. So that's really important. A second one that's important is tax. There's quite solid research that says as you lower the tax rates, people are prepared to take more of a risk and have a go because they see more of a marginal return for the marginal effort. And the third, I think, spur to innovation is the governance structure. And I think that's, at the moment, quite seriously out of whack in Australia because the whole focus of corporate governance, where investors and companies and governments were bruised by the GFC, has become risk minimisation. So if you're a director of a major company, the risk committee and the audit committee have really increased in importance and in the time and the effort that goes into those functions, but that's not a free kick. There's a cost. And there's a diminishing, I think, in the time and attention and effort that goes into your competitive strategy, the risks you're prepared to take. And there's a very strong feeling, for example, that every loss is a problem. Whereas, a loss could be the normal outcome of a sensible risk. A company that isn't having losses and failures is clearly not going to succeed as an innovator.
So is this a cultural problem that we've got in Australia? After all, if I look at the United States, for example, it's almost a badge of honour to say, I innovated, I failed, but I'm still going to innovate. Whereas in Australia, we might have a different scenario where people are just written off after one failure.
Yes, although that's, I'm not sure I fully agree with that, because if you look at our minerals, which is a great area of strength, we've got hundreds of small explorers giving it a go, and they've come up with dry wells or, holes that have nothing in them of value, and they wind the enterprise up and the shareholders go home a little bruised, but they start again. So we've had, considerable innovation in mining and in the resource-based industries. We've had much less innovation in the manufacturing industry. I think we've been reasonably innovative in the service industries. And education's a great example. I mean, we're a leading country punching well above our weight in terms of international education. So I'm reluctant to say where it's a cultural issue. What I'm saying is we had an environment which encouraged innovation. That environment's shifted, and it is less encouraging of innovation in the commercial sense.
Professor Fred Hilmer, thank you very much.
Thank you, Julie.
For more business news and analysis from Knowledge at the Australian School of Business, please visit knowledge.asb.unsw.edu.au.